right now I want to talk about the frozen housing market. The housing market is in such an odd place right now because here we are short somewhere, best estimates, they're really guesstimates by economists, that we're short 4 to 5 million housing units in the U.S. And that's enough to really be disruptive for buyers. And you think about a buyer and what's happened in the market in the last 6 years, where prices, the actual purchase price of homes, has escalated at an unbelievable rate, particularly over 19 to 24. And now kind of just sitting there. Home prices not really moving at all. A few cities have seen meaningful drops. Top of the list of that, Austin, Texas. And the bigger they are, the harder they fall. Austin went through a faster escalation in home prices than really anywhere else in America. Outstripped people's ability to afford. And so Austin hit that peak, and now prices have come down double digits. In the rest of the country, we have a two-part market. And again, I'm ignoring parts of the Midwest and New England where the inventory remains tight. Buyers are still interested in buying. And I was reading a story about housing in New Jersey recently. And in some of the communities in New Jersey near New York City, there's still multiple offers on homes. They may be selling slightly more than the asking price. But here's the shift, even in a strong northeastern market, where before a home going on the market might have gotten 20 offers, now it might be getting 2 or 3. So even in really intensely strong markets, it's just strong, not intense. Everywhere else, builders of new homes, when you look across the South and into the Southwest and Texas, builders are sitting on almost unprecedented levels of unsold inventory of new homes. So builders of new homes are offering a lot of deals right now. Number one on their list, they're offering subsidized financing on the home to turn the clock back several years to give an interest rate that really makes a home more affordable by far than it would have been otherwise. And I want to tell you, these loan offers from new home builders come 2 types. One is a temporary buy down. That's a gimmick where the builder puts a little bit of money in with a loan provider and you get a cheap loan for typically 3 years. And I call that a gimmick. What really matters is when a builder buys down the rate on that loan at a higher cost so that you have a great deal on that loan all 30 years. The power has shifted from seller to buyer in the new home market, in markets where there's a lot of new home construction. And that's where you got real power as a shopper. The used home market is frozen, frozen, frozen in much of the country. What's frozen mean? So you have sellers who have the house on the market at what the was price was maybe a year or 2 ago. But they have gotten their minds that their house is now worth what people were paying in a buying frenzy a year or 2 ago. Buyers, on the other hand, are facing mortgage rates around 7% less or more and much higher prices. They're like, can't do this. It's much cheaper to rent right now than it is to buy. We have not hit capitulation. Even though buyers are saying, I'm not buying, sellers have been reluctant to cut prices. And there have been a higher percent of price cuts than we've seen in years, but we're still at the frozen point, which is price capitulation. And when we get to price capitulation, the market will come back alive on used homes. That's when a seller says, okay, obviously my home isn't worth what it was a year or two ago. It's worth less if I want to attract a buyer. And so we will hit capitulation because eventually a seller goes from wants to sell to needs to sell. And that's when you get that marriage of price between what a buyer is able to pay and what a seller is willing to take. And we're not there yet.